This is the Catch Up Network.
The Bitcoin decline is creating ripple effects across traditional markets, with analysts pointing to October 6th as a potential peak for the crypto asset class. This liquidity-driven sell-off is now testing the theory that Bitcoin's volatility directly impacts broader market stability, especially as crypto-adjacent stocks like Coinbase face downgrades. The key level to watch appears to be Bitcoin's ability to hold above $80,000, as a break below could trigger additional selling pressure across risk assets.
Let's make one more move here, at least one more discussion point before we take a break. Bitcoin, it's an A-block story, I think, still, until it isn't. It's down again, okay? Bitcoin is. Coinbase got downgraded today at Argus. So, there's a belief that the market overall is not really going to be able to fully stabilize until Bitcoin does. You own Coinbase in the ETF. So what's your view on that?
I think I said yesterday, I've said last week, and I'll say it again today. I think it's going lower. I think the entire crypto space.
Coinbase is going lower.
It's going low because of what's going on with crypto. It looks to me like the crypto asset class peaked on October 6th. We're in the mix of a liquidity-driven sell-off. You could cite whatever reason for it. But in terms of observing momentum on a very near-term basis, there's no signal that I see in front of me that suggests a turn.
Did you believe? Do you believe what others do, that until Bitcoin firms up, at least stabilizes somewhat, that the market itself is going to feel a little more volatile?
I think sideways trade in Bitcoin is gives the free pass for equities to move higher. I think if we break down below 80,000 once again, I think that will have a liquidity effect on equities.
All right.
Short term and it's
What the discussion overlooks is how institutional treasury management cycles are creating unusual selling pressure heading into year-end. Corporate treasurers who loaded up on Bitcoin in 2023 and early 2024 are now facing compliance requirements to rebalance their cash positions before quarterly board meetings. This creates a predictable but temporary headwind that has little to do with Bitcoin's fundamental adoption story. The real tell will be whether this selling pressure persists into January, when these institutional constraints typically lift. Here's the contrarian angle everyone's missing. While Coinbase stock gets hammered, their actual transaction volumes during drawdowns historically surge as retail traders chase the dip. The platform makes money on volatility, not just upward price movement. Smart money knows this disconnect between stock performance and business fundamentals creates opportunity. The current setup mirrors late 2022, when Bitcoin traded sideways around similar psychological levels before institutional demand returned. However, this time, the risk landscape includes potential regulatory clarity from incoming administration changes, which could either accelerate institutional adoption or create new compliance burdens depending on policy direction. Watch for Bitcoin's weekly close relative to the 80,000 level and institutional flow data from Bitcoin ETFs. These metrics will signal whether we're seeing genuine distribution or just temporary liquidity constraints. That's your bite. Stay curious. Thanks for watching. And of course, if you like this video, don't forget to like and subscribe below, but don't stop there. Start making videos like this for your own channel. Click the link in our bio to get started.